if one of your employees can claim that they are somehow affected, you can now be responsible for up to 2 more weeks of unpaid leave. And that's probably not what a lot of employers were expecting right now. And you know, they put this little sweetener in there that you can get it reimbursed through tax credits. But as Christian and I were just talking about it, good luck on that, because they only, what is it, Christian? They only let you do that with the FICA part of your taxes.
Right. So it's only the employer match of the FICA that is a credit, and it's not refundable. So it's not like if you had a whole bunch one month, you could offset it against other liabilities.
Yeah. And you know, there are some exemptions, and this is where I'm getting to whether we can talk about it in particular, with for businesses with less than 25 employees. But if you want to get that exemption, you have to go get our friends at the Department of Labor to give you an exemption. And I have sort of a skeptical view of our friends at the Department of Labor wanting to help out small business, after having just spent a little bit of the last hour having a rant about trying to explain to somebody at the Department of Labor that a truck with a wire attached to the ground is actually a grounded truck. So, and then getting cited by them. So not a big fan here. And so guys, this law is just really, I mean, on one hand, it's troubling. On the other hand, good gracious, there's just not that many people getting sick with this at the end of the day. So let's put that, the emergency leave situation, on the table. I hate these alphabet soup laws that just are knee-jerk, probably not going to come up in most of our businesses. Now, here's something that we have had come up several times today, and it's contract performance. Okay, so there's this concept of force majeure clauses or act of God clauses. The idea there is, can they excuse performance in a contract? And most commonly what we're seeing now is having that come up in rent. Okay, so the answer is, and you guys can just smack me next time you see me, it all depends. Okay, it depends. And look at Lorenzo Banks just cracking up because he knows it. He goes, yeah, that's the answer to every legal question.
Typical lawyer answer.
That's grade A lawyering right there, Mr.
Well,
Davis.
you know, it depends on how the contract is written, and you know what the force majeure clause says. So, you know, your three maybe species varieties of force majeure clause are going to be, you know, legitimate acts of God. So, you know, another tornado hits more, that's an act of God, guys. Okay. Number two, war, terrorism, or epidemic. Well, yeah, an epidemic is probably pretty tied to what we have going on right now. At least we could say that. Or how about this? Acts of government agencies. Well, what do we call it when the state, federal, and all the municipalities are shutting down our businesses, or telling, you know, this is an essential business, this is a non-essential business, which, by the way, seems a little bit arbitrary to me. Bought a pair of shoes at Academy, can't go to shoe department. Okay. So what we're seeing is a lot of people going, do I have to live up to this lease, or do I have to live up to the terms of this particular contract? And the answer is maybe you don't. And from our side, we'll end up representing people on both sides of that equation. And it's, there's going to be a lot of litigation about that. So, and there's no clear answers. another situation is liability. What's your tort liability? Let's say you have an employee that gets COVID working for you and then dies. Well, is there going to be some sort of tort liability for that, or is it going to be a workers' comp claim? And I'm sorry, I don't have a real clear answer. I don't think anybody does right now. I mean, of course,
You're saying if they contract it at the office?
yeah, good luck trying to, good luck trying to prove this, that, or the other thing.
Right.
We're, let's say you had one, nobody's going to have somebody at the office. I mean, this could conceivably get you in trouble. Let's look at this scenario. You have somebody at the office, you say, oh, I know you have COVID, but you're just going to stay here and work, right? Because you don't feel very bad. And I know a lot of the people that have it, don't feel particularly bad. And then that person exposes somebody else. Do you have some sort of extra workers' comp liability? Somebody's going to challenge that and try and keep you out of workers' comp court.
Wouldn't that already, I'm sorry, wouldn't that already be a thing with if an employee dies with the flu? Wouldn't that scenario be the same?
Yeah, absolutely.
And so are we covered for the flu in a general tort liability?
I
don't know. I'm just asking.
Yeah. I don't think anybody's going to bring that claim. So that's not as big of a concern to me as this is. In the law, we live in a lot of bizarre gray areas, and this is the sort of thing that, that worries me. I'm concerned about the concept of employers' liability for people getting COVID on the job, just because of stigma is the wrong word, but the exceptionalness is maybe the right word. I can tell you in a lot of other places in the country other than Oklahoma, you're going to see a lot of litigation about that. So those were the three main things I wanted to touch on, which I suppose my time was kind of short. Everything's up in the air on this. With everything, we're kind of in an undiscovered country on this. It's our first time through this, but if you haven't, I'd take a quick look at that Families First Coronavirus Act and see how it responds to you, really in particularly in regard to employees wanting to take extra time off because they don't feel well or because they have a dependent or child that doesn't feel well. So take that into consideration. Take a look
Matt,
at your...
I'm
Go
sorry.
ahead.
I forgot to, you do have a couple more minutes and I forgot to tell you to introduce yourself. So work that in there.
Oh, okay. Well, I'm Matt Davis from Davis Business Law, and we practice law, just do small to mid-sized business law in Oklahoma City, Wichita, Enid, and Tulsa. So that is who we are. Take a look at your contracts. If there's a contract that you think maybe you don't want to be in, it may be, or if there's part of the performance you don't want to do, that's a possibility. But conversely, that snake will bite both ways. And liability, it's out there. I don't think it's that big of a deal in Oklahoma, but just from sort of a academic legal way of looking at things, the newness of COVID is interesting. That's really more of a law school question than on our front burner as business owners. So,
thank you, Matt.
You're welcome.
If you guys got questions, please put them in the chat and we'll get to them. Next up is Darren Webb. If you will introduce yourself, Darren, the floor is yours. You're muted.
Muted? Nice.
There you are.
Hey, I'll try it again. I'm Darren Webb. I've met some of you. I've met all of you. I've sold residential real estate in the Oklahoma City area for around 25 years. In that time, I've sold, I don't know, several thousand properties. I've not sold, my new clients, I'm telling you, I've sold a lot of real estate, but I have not sold real estate in a full-blown pandemic. It's a new gig for me, right? Best realtor line I have, just I like humor sometimes and serious. Best realtor line of the day. Can you see yourself being quarantined in this house? That was pretty good, right? I think it's interesting that you have to be really aware that there are opportunities in any marketplace, right? And sometimes the media and people pretend to tell you there's no opportunities, and there really are. So what's interesting, I was looking in the last week in an area that I work a lot, there have been 85 brand new houses that were listed. There have been 137 houses that went under contract. So it's not necessarily what everybody thinks as far as the market's just terrible. Now, that being said, I'm telling people this, obviously, if something was worth one price in February, that probably changed in March, and that did probably change a couple weeks ago, right? 10 days ago when oil and gas went down. And sometimes people don't always understand that. But I think it's important to realize there's always hope and there's opportunity. So then the question is, where are those opportunities? I own a lot of rental property. I don't say a lot, but I like rental property. I'd like to own more. Some of you may have rental property. Some of you may be in commercial leases, but I think the principles are all the same. You've got to dance with people. What I mean by that is I started calling the people that I'm rent properties from me before leases were coming in, right? Just to find out, are you gonna be able to pay rent? Not pay rent. Some of them I can't pay full month's rent based on the lease. Okay, great. So how much can you pay? I think it's important that in this market, you always hear this term that everybody says we're together in this. Really, together in this is, exploring where somebody is. So a lot of times it's just whether it's your landlord or a renter. Hey man, how you doing? What's going on? How are you feeling? A lot of times they're going to, empathy is very important in this. And so I've got a guy that's a restaurant manager in a restaurant in Midwest City. He lost half of his rent, or half his income, I should say. So I was like, hey, here's my payment on this house. Can you make that for me? What can we do or not do? I think it's important to realize that if we all are in this together, that we treat people that way. And we just find out what the situation is. Now watch, it's the same principle on a commercial lease. If you have a lease commercially, and you've got a good reputation and relationship with that landlord, they're not going to kick you out. Okay, legally they can't. The lawyers on the video here, but it just doesn't make sense. And so then you dance with people. So I just did a little lease in Edmond for a nonprofit organization. And what we did is we initially did the lease like 1st of March, and then all this stuff hit. And then I'm calling the agent and going, look, things have changed. So they're not going to start paying rent till like June. I mean, it's the same principles that you see all these people are doing on a national basis. It's just, small business just looking a little bit differently. I think it's important to treat people the way you would want to be treated is what I'm saying. My wife brought up a really good point. When all this came down, she said, well, you can't in good faith ask people to pay you what they owe you if you're not willing to do your best to pay others. So we want to really work through that process, even though everybody's take advantage of this and take advantage of that. And there's nothing wrong with that. I think you've got to realize that everybody is in the same boat and finding out where they're at. And I put out for me, watch personality. When I get really stressed, I am a high D. I'm a driver, okay? I'm going to shove something down someone's throat and then go do another one and do another one and do another one. And that's the nature of commission sales. But just again, having empathy and understanding, the process. Example, if you have a triple net lease at $20 a square foot and you realize that your cash flow has been reduced for the next 90 days, I mean, you guys are all smart, but you would go back to the landlord and go, look, I can't pay $20 a square foot on a triple net lease. And, I can pay 15, or you've done your calculations. And so what they're going to do is they're going to take that $15 a square foot on a triple net lease, and they're going to figure out a way to add that $5 and make it up one way or another. Or sometimes I have a client, and he said, hey man, I'm on a call right now with my lawyer and a banker. I've got a $5 million payment due this month. And guess what? I'm not going to be able to make it. Now it puts things in perspective, but it's the same principles, regardless of what it is, if it's a house, if it's a rental, anything else, if it's with your mortgage company. I have a lot of mortgages. And so I've already been in touch with the bank and just, hey, what are my options and what can I look at? And ironically enough, I'm actually doing a project with the bank on a construction loan on some duplexes I'm building.
Hey, Darren, can I interrupt? I read that and this is from the SBA's website, that SBA mortgages, actually all SBA loans, including mortgages, they're making 6 months payments without having to do anything. So if you've got somebody that's in that situation, that's your landlord.
Yeah, and it's absolutely the case. Now, the challenge you're running into is like, I had some county taxes due on properties. If you called down the Oklahoma County Treasurer's Office right now, they gave you 30 days. I called today and they're like, payments due postmarked on the 30th. And if not, it's a 20% penalty for the first 90 days and it continues. You've got, I know some clients that have had, got a $100,000 tax bill based on a business and the business is shut down. That's where you're calling Mr. Davis or some people like that. So, I mean, there are some issues that are out there, but they are seeming to want to work.
Property tax.
Go ahead.
Yeah, the property tax, I know is due on March 31st, and Larry Stein extended for 30 days. But now we're about to reach that deadline. Do you know if they extended another 30 days or is still due on the 30th of April?
Due tomorrow. That's what I was told today. So that's from the Butch Freeman office. So there's going to be some issues there. And what's interesting, government entities, they're not allowing you to pay that out even. Okay, they want their money or they're going to penalize you. That's my understanding in relation to that. So last part of this is there are opportunities out there. I was in a house yesterday and I'm looking at buying it because you have a lot of people that they love real estate. They watch whatever and they think buying real estate's great and they've leveraged into it. And now they're not going to get cash flow or a situation. And as a result, there's going to be opportunities to buy those particular properties. And again, you've got to have a banking relationship. And I know all of you do to kind of find out what that looks like. And that could be everything from taking out a HELOC on your personal property. That could be doing some type of construction loan or doing some kind of low interest loan. That could be borrowing against another asset that you have, another idea. And if people say, I don't have the kind of money to do those projects, well, I'm not a big fan of partners, frankly. Okay, lawyers would tell you partners don't always work real well. But if you've got somebody that you feel like you could be a great partner with, bought a property with a guy in Edmond the other day that was $71,000 and he turned around and they're priced for $110,000. You know? So I'm just saying, be aware that there are opportunities in every market, especially with rates, being as low as they are. And personally, I think rates are going to go lower before they go higher. They have not lowered rates. Prime lending has gone down because of the backlog of everybody mortgages. They're not necessarily playing well in the sandbox, and bankers, because they're concerned about getting paid, their yield spreads, they want them to be as high as possible. So there's definitely a lot of opportunity out there. There are challenges. I've had 3 transactions in the last week where they didn't appraise. That has not happened to me, I think, in a long, long time. You're going to have some of those things, but I think the biggest thing is just to be as proactive as possible and address those issues in an intelligent way and communicate with people in a way that makes the most sense. That's what I would say. 10 minutes or less, which is impressive for me if you don't know me that well.
Thank you, Darren. Emily, I have not seen the ability to chat to anybody except you. So I don't know if that's something on your end that you can or want to modify.
I'll see that.
Okay, so I will end this with an update on the tax side. I'm not going to spend a lot of time on the SBA loans because that horse is out of the barn. I will tell you I was talking to a bank today that had 1,300 PPP loans in the queue Monday, ready to go. And the SBA system was so bad, they got 4 through. So, and this is a multi-billion-dollar bank, Oklahoma bank. So everybody is struggling with it. The stories are legion. I think there is a lot of confusion on the repayment or forgiveness side, which I'll touch on here. The regs are not finalized on the forgiveness and the documentation that's going to have to be given to the lender to justify the forgiveness. A couple of key things is that the initial deferment of any payment is 6 months from funding. So I'm assuming that somewhere between the 8 weeks that you have to spend the money and the 6 month mark where the first payment would be due, there are going to be some final regulations on what is required for it. The other thing is that the law specifically, and then the regs backed it up, that the SBA is going to indemnify the lenders from any potential fraud on the borrower's part. So I think as long as the banks do a reasonable job of collecting the information, there's not going to be a problem getting the loan forgiven. 75% of it has to be spent on payroll expenses, which would include your state unemployment tax, your health benefits, your retirement benefits. It does not include FICA, your portion of the FICA. It can spend another 25% on the rent or mortgage interest plus utilities, although utilities hasn't really been defined. I've had some questions around, well, is that all or nothing? No. If you only spent, you got a $100,000 loan and you only spent 80, you still get the 80 forgiven as long as it's for qualified expenses. The other question I've had is, well, what if I have people, I don't have the same people, or I don't have the same number of people? The regs that I've seen do base it on two criteria. One is the dollars, so it'll be cash payments. It's not what you accrue. It's not a pay period. It's what is the check date, and is it in that 8-week window? So, you know, you could conceivably move a check date, prepay them, you know, if your check date didn't fall directly in that 8-week window, that's fine. So the first thing is the dollars. The second thing is on the head count, and it's based upon full-time equivalents. So if you reduce your head count, you're potentially losing some of the forgivability. So let's say you had 5 employees going into, you based your loan amount on 5 employees, you bring only 4 back, same dollars. Say you spent the same, it was a $100,000 loan, you spent $100,000 on payroll expense, but you only had 4 employees instead of 5. The way the regs are written, that it would be a pro rata reduction. So you'd only get to deduct 80% of it. So that's all on the SBA loans, other than to say the EIDL, the economic injury disaster loans. I still haven't seen my advance. I know a lot of people haven't seen theirs. Virtually nobody I've talked to has had the SBA pick up their file to underwrite it as far as actually doing the loan itself, not just the advance. Couple of things in the tax law that I think are critical for small business owners to consider. The first is, as a substitute for the PPP loan, is the employee retention credit. Now, in the original law, it said that if your business had been, your top line had been reduced by 50% or more, then you qualified. But the IRS regs behind it said that if you're basically forced to close or some municipal action that you were not able, so if you were impacted by that. So it doesn't mean that your business was shut down, but your customers' businesses were shut down. So I think most people are going to qualify for the employee retention credit. It's 50 cents on the dollar for the first $10,000 of an employee, and that doesn't have a time frame except the end of the year. So you got 10 grand to spend between now and the end of the year. You get 50 cents on the dollar. It's not an income tax credit though. It's a credit against your 941 and it's refundable. So it's just like you made a tax deposit. So I had people ask, well, I'm never going to have that much in tax liability. Don't need it. You can get an advance on the credit by filing Form 7200 with the IRS. They have set up a dedicated fax line. Yes, the IRS still has faxes. I don't know. We haven't submitted any, so I don't know how well they're handling those advance requests. You can't do the PPP loan and the employee retention credit. Now, technically, it says you can't do any forgiveness on the PPP loan. So if you got the PPP loan and then decide the ERC is a better deal for you, I think as long as you pay back the PPP loan and don't ask for any forgiveness, you're okay. I think the way I see this and run the calculations, if you have lower paid employees and or high turnover, the ERC is going to be a better deal for you than the PPP. But it would just be a situation of looking at your specific situation. The second thing in the CARES Act that I would highlight is the fact that they removed the limitation on taking net operating losses carried back. So the previous tax law had eliminated the carryback. So basically, if you have a loss in 1 year from your business, you used to be able to carry it back. Actually, they required you to carry it back before you carried it forward. Part of the revenue reconciliation was that they said, no, you can't carry them back anymore. You can only carry them forward. Well, the CARES Act suspended that for this year only. So it could be a loss that you generated this year or a loss you had in previous year that you can now go back and amended return and get a refund. So I would definitely talk to your CPA or tax preparer and talk about that. If that is a situation in the last couple of years, you had a loss, you might be able to use that now. Now, having said that, amended returns have to be paper. You cannot electronically file them. And as of the last notice I saw, the IRS was not processing any paper. So theoretically, you can amend a return, but there's no one there to push the paper. So, you know, who knows? That's all I've got. So I'm going to turn it over to Emily with the questions.
So our first question was during the legal portion. And the question was, are the 80 hours of paid sick leave in addition to?
In addition to what?
I think they probably mean in addition to the PTO that's issued by their company.
Well, the law is specific, and Matt, I'm going to jump in on this, but interrupt me if you've got a contrary opinion. But you cannot force an employee to take their paid time off. So it's a function of they can have it whether they've got PTO or not, and you can't force them to take PTO.
Well, and I'm not sure.
Question?
I'm not sure I understand the question either, but this provision in the Families First Coronavirus Act, in effect, puts another, 2 weeks on the backs of the employers with the somewhat spurious tax credit that you're going to get.
Well,
for
actually, it can go all the way to 10 weeks if they've been there 30 days or more.
Oh, good gracious.
So yeah, but thankfully that's only at 2/3. So you don't have to pay them full time.
Okay. Our next question was, can you state Oh, I'm sorry. On the PPP, what if there is an increase in employee count from 2019 numbers, not a decrease?
No effect. I mean, as long as you spend the amount, you get it forgiven. One of the other things that I saw was, does an employee taking unemployment affect it? And the answer is no, nothing that I've seen around that. So if your employee during the interim was taking unemployment, or does it during the 8 weeks, it doesn't affect the ability to forgive it. Obviously, you can't use the unemployment benefits to forgive your loan, but it's just a straight, what do you pay them in the 8 weeks?
And, Christian, I was taking a little ribbing for the it depends, but I'll note you were using the I think. And
Same thing.
yeah, well, guys, the backstory is Brim and I grew up together too. So there's
Don't tell people that.
Yeah,
No,
okay.
don't, please don't.
Let me clarify that first question, if I can, because sorry, I had to step away for a second. But the 80 hours that they're requiring you to offer a PTO for COVID-related illnesses, if we already offer, like I offer 4 weeks of paid vacation to all my employees, but that, I mean, it's PTO, so they can, if they get sick, it's in the same bank. So is this in addition to that, or if we're already offering 160 hours, is that enough?
As I understand it, it's additional.
Yes, I agree, because you can't make them take their PTO.
Okay, what if, okay, all right.
Hey, but the government's going to pay you back for it. So
Arguably,
eventually.
probably not.
Emily, your next question?
Yes. The PPP loan calculations excluded FICA withholding, but am I correct in saying that you can use the funds from the loan to pay those?
So the payroll calculation, and we don't have any bankers in this group, do we? Okay, good. Bankers are stupid. And I've seen a lot of really dumbass questions on these PPP loans. So the loan should have been calculated on the gross payroll. So if you paid somebody $10 an hour and they worked full time, that's 20,080 hours. That's $20,080. So what you call the trust fund portion, which is the FICA and the federal withholding that you take out of their check, didn't ever come into play in the calculation. And it doesn't come into play in the amount that is forgiven. It's just gross payroll.
Does that answer the question?
It was a stupid banker actually that asked the question. They don't want to.
Sorry, I was muted. No, it was me that asked this. James Allen asked the question.
Oh, well, you're not a stupid banker.
I'm not a stupid banker. I'm just stupid. But no, then I got hosed because they took out the withholding, and there is verbiage in the law that says that the calculation is not done on neither the employer's contribution nor the employee's payment of withholding tax and FICA and FUTA. So I got shorted about 14 grand, I think. So it's whatever.
I had the bank call and say that they'd overfunded a loan. I'm like, well, good luck getting that back.
Whoops.
Okay, our next question. Have you heard any word on whether or not the lenders on the PPP will have the ability to decide the eligibility of forgivability of the loan?
Yes, they are the ones making that determination.
The lenders?
Yes. Now, I did see after the Lakers got their PPP loan that Munchin said yesterday that every loan over $2 million they were going to audit, and that there was criminal liability for those that attested that they needed the funds but really didn't. And they have until the end of May to give it back. So
Oh, and what I was giving Christian trouble about the I think is they have not firmed up the regulations on this PPP. They're giving you the business of this is what it's going to be, but it's not set in concrete yet. That concrete's still wet, and they're going to go poke a whole lot of holes in it and reform it here, reform it there. And our advice to everybody who asks us anything about it is just be as conservative as possible with the whole program, because they're going to come up with all sorts of exceptions to the rules to, oh, well, anybody over $2 million, we're going to go nail them to the cross, right? So, and a lot of it's just going to be political. They're going to find some politically unpopular things, so yeah, be careful.
Yeah, Lorenzo.
I was the one who asked that question about the lenders being able to decide the forgivability of the loan. I think my concern is that, if I went through Regency Bank, they have completely different standards as to, as opposed to Legacy Bank, who is saying that, oh yeah, this is forgivable, and Regency saying, oh no, that particular expense that you had with this money was not forgivable. It seems like the left hand doesn't know what the right hand's doing with all these lenders being the ones determining.
Well, let's put it this way. The lender has an interest in getting it forgiven because the SBA is a lot better creditor than you or any of us, right? Mm-hmm. So I agree with you. They are going to have different requirements and different standards, and it potentially is a mess. But that was why the SBA was allowed to indemnify them, so that if they screwed up and you gave them the wrong documentation, mm-hmm. that they're not on the hook for. Okay. So they've got a pretty broad paintbrush there.
Now, I wonder if they really are better creditors after they, our friends in the U.S. government just went out and, borrowed a third of the GDP in the last month. Just me, just saying.
Emily, next question.
Has anyone in the meeting been contacted about their EIDL loan?
I have been already funded.
Me too.
Is that the advance or the full loan?
I got the advance, and then 4 days later, I got the full loan.
Oh, wow. How did you get the full loan? Because on the loan application, it didn't even say how much you were trying to borrow.
So what happens is I got all of a sudden I logged into my bank one day and there was 10 grand in there. So that was pretty cool.
Me too.
Yay!
And then 3 days after that, I got an email that says your idle loan has been reviewed. Please log in and create your account. And it gave me a specific link. Unique to me. And so I click that, and all you do is you type in your email address, and then a portal comes up where you slide. It basically says you've been pre-approved without calling us. You've been pre-approved for this amount. Use the slider to tell us what you want. And so I just slid it all the way up, and I hit submit, and then it says, thank you. Please electronically sign all these documents. And I just clicked all the buttons, and then 2 days later, I had all that money in my account.
When was that?
The SBA did say that they were working the applications they didn't say random, but basically they weren't doing it in a like they were going state by state, so they were trying to, maybe it was in order of receipt, but I don't think so. So
well,
I'm glad that you got it. That's awesome. So I had to apply twice because I applied the old portal way, and then they came out with the new system, and then that's when I did it the second time. So I have no idea.
What was your number? Your 3300 number?
What does that mean?
Well, you when you applied the second time, you got a number that begins with 3300, and then like mine's 272,612. So I'm pretty sure the 3300 is a line number, and I know that another forum mate, he's been funded 2 weeks ago on his, and his was like 86,000.
Okay, 330-158-4345.
Okay.
I don't
So
know.
we got the $10,000 deposited in our account, but we haven't heard anything since then.
Well, I told you I was stupid earlier because I didn't ask for the advance because I didn't understand that it was a grant.
You didn't?
For one. Like,
I don't think you
the hell-
had to ask.
Yeah, there was a checkbox on it that says,
It was.
"And do you want a
Oh,
10?"
there was? Okay.
Yeah.
And in my opinion, I was like, okay, well, I've got funding for, I've got enough funds to last 6 months or whatever. I don't need the 10 grand right away. But now the 10 grand. Then they came out with a second ruling and said, oh no, it's $1,000 per employee, but it's a grant. I'm like, well, what the hell?
Well, get ready for a lot more what the hells, because
Emily, do you have any more questions?
Yeah, so as a follow-up to that, especially for those of you that have been funded or at least gotten the grant portion, how long from application to advance was your process?
Susan?
Mine was like a month. I think that we filled it out at maybe March 30th, we looked back. And we got it like the day after we got our PPP thing, which was like I think PPP started on a Friday, but nobody really got their applications in till Monday. And I think we were funded on Wednesday. So that was like, oh gosh, I don't even remember. I'd have to go back and look. But I feel like it was like a month. But then what I'm saying, it sounds like it wasn't a month. It was longer or it was shorter. I don't know.
Cody?
My original submission was March 24th. And the second time I did the application was April 2nd, and I was funded last Wednesday.
Thank you, guys. Next question. As businesses start to reopen and create wellness policies for their workplaces, can those be a mandatory condition of continued employment?
Good question.
wow.
Could you repeat the question, please?
Yeah, so as employers begin to reopen or continue operations and put in place wellness policies, can those wellness policies be a mandatory condition of continued employment? So if an employee says, like, I refuse to participate, what legal power does the employer have?
Wow. Well, okay. Let's start with the absurd. Let's presume you're a gym and you have somebody who weighs 350 pounds who wants to be a personal trainer. Well, yeah, you can enforce that. But I mean, let's say you run an insurance agency and you try to tell your employees that they have to go to the gym 5 times a week. Man, you're cruising for a bruising with that. That's so okay, Lorenzo, get ready. It all depends, but I don't know what exactly we mean by wellness, because that can mean a whole lot of different things.
Could you force them to wear a mask?
Yeah, I would think so.
I know some workplaces are doing like temperature checks or just requiring different social distancing at the workplaces.
Yeah, I mean, you can probably get away with that. So, the definition really boils down to what do we mean by wellness? What does this regimen mean?
I think they mean specifically related to coronavirus. So a lot of companies are putting policies in place to say, like, this is our plan to keep people safe when they're in the workplace.
Yeah. Let's take it another step. Can you force people to go get the flu shot? What if they come up with a coronavirus vaccine? Can they force them to go get that? Don't think so. Minor measures, yeah, I would think so. Yeah. So the basic stuff going on now we can probably get away with. And then under other circumstances, other things, but yeah.
Okay, our next question is, once offices do reopen, if an employee says, we want to keep working from home because they don't feel safe, can the employer say, I'm sorry, you can't work here anymore? Or are they required to accommodate that employee?
I think they're going to want to accommodate that employee under the Families First Coronavirus Response Act. Because if you don't, our friends in the labor law world will probably have you down at the federal courthouse.
Well, what if they say that like 6 months from now? I mean, is this an indefinite thing? Because I can't have my entire staff working remotely.
Yeah. I think that it depends on the environment and how this whole thing plays out.
Yeah, you probably can't fire him for wanting to work from home, but you could fire him for other performance issues.
Yeah.
When it becomes a.
Yeah, absolutely.
Emily, do we have any more questions?
I have a whole list of questions.
Well, we've got 5 minutes, so.
Okay, well, we can wrap up then. Does anybody else have questions? I have no more questions submitted.
You're
Yeah.
just saying you've got a lot of questions about
I
life.
do. So many questions.
Do you mind if I add something about the PPP loans and
Absolutely.
the other loans? I've been on a lot of these calls, doing a lot of issues, and the things that I've heard, that the advice that I've heard, because as Mr. Davis said, nothing's set in stone. You know, we know what it is, and we don't know what it is, and if you listen to the Department of the Treasury or the government or the SBA or any of your banks, it changes not even day by day, but hour by hour sometimes. But the best advice that I've heard people give is with what Matt said, was being very conservative and document. And this is what I tell everybody and my clients: just document. So that when it comes down to finding out what's forgivable, what's not, what's going to be a grant, what's not, whether you've done it right or you haven't. If you really do a lot of good documentation, you'll have the best possibility of ending up on the right side of your loan. So just document, and be very, very conservative about it. And I think that you'll end up on the plus side of that, or you'll be more likely to end up on the plus side of that than the negative side.
Yeah, one little item I'd add to that is we've been advising our clients when they have PPP money to keep it sequestered in a different account than their main operating accounts, and only paying payroll out of that. So when payroll comes due, you don't hit your operating account, you hit, your PPP account, grab it from there, bang, and just keep your books super clean. That's your best bill of health with your PPP deal.
I will say, if you have anybody that's doing the Family First thing, if you can not pay the Family First out of that PPP loan account, that also helps, because you deduct the Family First stuff from your payroll taxes, and that's separate, and you can't double dip that.
Good point, Susan.
Thank you, Susan.
So Emily, you want to show us what's coming up?
I realized I was muted. This is contact info for all of the presenters today. So if you have questions for them, want to get in touch with them after this, this is how you can reach them. On Thursday, on Wednesday, tomorrow. That should say Thursday, but it says Wednesday. Sorry about that. So Thursday, April 30th, Thomas Hoover, who is on the call, is going to be offering a lunch hour IBS session. So he'll present a little bit of information about the EOS process. And then if you have specific issues that you're facing or that you're facing at your business, there'll be time to kind of process through that and then gain some tools so that you can keep gaining traction. And then next week, on Wednesday, May 6th, we'll have our second session of Unparalleled Leadership in Unusual Times, and it will cover sales and marketing. So if you're interested in learning more about that, I encourage you to register. All of that information is at eookc.org/unparalleled. We also have.
Those are some, I just got to stop you, Emily. Those are some good looking folks right there.
Aren't they?
Kim and Cody, man, rock stars.
We also have a lot of resources related to coronavirus on the EOKC website. So if you're interested in other training opportunities or specific resources related, we encourage you to look at the website.
All right, so hang on for virtual happy hour. And thank you all for attending. I guess you're going to stop the recording. We don't want to record happy hour. Good God.